Mike, I see that bet in Nigeria turning out well for you guys this time around, and especially when you contrast it against the kind of growth that you've achieved here in South Africa.
Yeah, good afternoon. I think that's right. If you look at our numbers, we had headline earnings in total up just a bit under 15%, which is obviously a very strong outcome in the difficult environment that we're in right now. But if you unpack that a little bit more, you'll see that a big piece of that growth, probably about 10% of it, was contributed by the turnaround in ETI. You may recall ETI actually made a loss in our numbers last year, so returning to profitability did give us a big boost to growth this year.
And then I know that you don't play an exact hands-on role there in ETI, but I'm interested in your outlook for that business, given the continuation of a Buhari administration now for another 4 years.
Yeah, so we have two members of the Nedbank Exco team who are on the ETI board, Mfundo Nkuhlu and Brian Kennedy. So I think they won't say that we don't play a hands-on role. It's a very key part of their portfolios. I think what we're really pleased is ETI, having had a very difficult 2015 and 2016, has now reported 7 quarters of profitability in a row. It has been helped by a slightly better economic situation in Nigeria. You may recall about 2 years ago, Nigeria fell into recession as the oil price fell pretty strongly. So while there's still some risks there, we certainly are more confident in the outlook for sustained growth from ETI.
Richard?
Yeah, I mean, it's positive to see some decent numbers from an African investment. As we mentioned off air, it's from a low base. And certainly the results are the financial sector has certainly been a bellwether. You guys are out the gates first, with all the other banks reporting in the next couple of days. Not disappointing being the key. But there's not a lot of enthusiasm and excitement right now. In fact, the big elephant in the room really, as we all can attribute lots of management time and thinking of at the moment, is really Eskom. How are you thinking about the year going forward? Because results are historical, and we're far more interested in what's happening 12 months out.
Okay, well, we spent quite a lot of time on the results that we announced today, so we can move off them pretty quickly. But no, I think if we looked at the year ahead, we've seen GDP numbers just printed this morning at 0.8%. Our current forecasts is 1.3% next year. So broadly speaking, still relatively low growth, but slightly better than 2018. And what that means in our business is we would expect to see slightly stronger loan growth and slightly stronger transactional activity, meaning slightly stronger revenue growth in 19 than in 18. If I unpack that a little bit, we actually saw reasonable growth in the retail side of our business from a loans point of view. They were up 7% year on year. And the slow patch has actually been in our wholesale business, or CIB. Loan growth there actually ticked up quite nicely in the second half. So we would expect going into 19 to see an improvement in loan growth, primarily driven by an ongoing improvement in CIB and a continuation of around about the 6 or 7% growth rates in our RBB environment.
Yeah, what drove that demand for loans in CIB in the second half of 2018?
Well, actually the first half was quite unusual in that we had a large number of what we called unscheduled repayments or prepayments. So we had very strong pay downs in the first half, and in the second half we had lower levels of pay downs. There was also some quite strong loan activity, and you would have known that the fourth round of the renewable energy transactions also all closed out around about the middle of the year. So all of that would have boosted loan growth into H2.
And any improvement in kind of business confidence at this stage?
Yeah, so again, I think, depends where you draw your line in South Africa. I still think that the South African economic environment today is significantly better than 18 months or so ago. It might not be as good as we would like it to be, but it's certainly better than 18 months or so ago. And there are a number of really key milestone events that we have to get through. They'd be well spoken about. There are elections in May, the resolution to Eskom, and more definitive resolution around expropriation without compensation. I think those are the 3 really big issues that if we can get through those, we're likely then to see an improvement in confidence, investment, and therefore growth.
I mean, Mike, you're talking about an improvement in particularly the getting more customers into your stores on the retail side, growing market share. I'm interested in what you have been doing there. I know you guys have been investing quite heavily in the digital space, and there are innovations that you are planning to announce. So just paint a bit of color there. How are you bringing customers, not me yet, into your doors? And number 2, what product innovations or digital innovations are you planning to launch this year?
We'll have you in a green dress next year. No, I mean, I think we've been very deliberately and consistently investing in technology over the last 5 or 6 years. And actually for the last 2 or 3 years, we've been spending about 2 billion rand a year on new technologies. And those are increasingly evidencing themselves in new products that we can bring to market.
You're talking about the app.
I'll give you some examples. If you look at the Nedbank Money app, it was downloaded more than 1.6 million times since we released it. It currently has a 4.5 rating in the Apple Store. That's the highest rating of any banking app in South Africa. If I look at our private wealth app, it was recently rated in a global survey as the second best private wealth app in the world. So we think we've got really good digital products out there at the moment, but we're not complacent. And with this investment, we're going to continue to build on that. So coming during the course of this year, we've got a new onboarding platform, making it much easier for customers to sign up as customers of Nedbank. And we've got a new loyalty and rewards program coming in the second half of this year.
Right. Richard?
Yeah, I mean, I think that it's great to see that the banks have been so innovative in an environment where all of a sudden we are having some new entrants into the market. And I'm sure that this new technology is driven by enhanced competition. And certainly there's a lot of disruptive technology and disruptive tech that's going about, and it's very encouraging to see the likes of yourselves enhancing that. It's a costly exercise, and I'm interested to understand kind of the milestones associated with these things. I mean, it's great to see things being downloaded. What is that from a cost center perspective? Are these initiatives breaking even and making money yet, or is it kind of a longer term horizon that we're looking at?
Yeah, so I suppose there's multiple ways that you can look at that. If you aren't at the forefront of investing in technology to give your clients a really great digital experience, you're going to go backwards really, really quickly. So if you looked at our non-interest revenue generation, for example, last year, we grew non-interest revenue nearly 8%. So that's indicative of some pretty strong underlying activity in our ability to attract clients to our franchise and for them to transact more. If you look at the total scale of our investment, there's quite a lot of detail in the results presentation we give this afternoon. But since 2010, we've invested about 7.7 billion rand in new technologies. And we think that will peak at about a 9 billion rand investment by 2020. And we're pretty confident that will enable us to do two things. Firstly, continue to grow revenue on the one hand and attract new customers. But secondly, to be more efficient. And we saw last year a drop in our efficiency ratio, cost-to-income ratio, by 2%, and we'd expect ongoing reductions in our cost-to-income ratio over time.
Right. I mean, Mike, I would have liked to talk to you more about transformation, because I was quite surprised at the level of black representation and particularly female representation at board level. But I'm having to choose between that and Zimbabwe, and I've only got about a minute and a half. And I want to speak to you about your operations there in Zimbabwe, particularly following the introduction of this new kind of de facto currency, the RTGS. I think it's the RTGS. You can correct me there if I'm wrong. How has that impacted you, and are you confident that this step that the Zimbabwean authorities are making is a positive direction in terms of restoring currency stability there?
Well, I'll just jump in to say we were really pleased to get level 1 status under the FSC code, so I'll have a little bit of a transformation punt. But if you look at Zimbabwe, it's obviously an extremely difficult and fluid situation. No one's quite sure yet where the currency is going to settle. In this set of numbers, we actually estimated an exchange rate of 3.88 RTGSs to the US dollar, and we restated all our consolidated results to that exchange rate, notwithstanding that we don't really know what the underlying exchange rate is. So I think it's still a very complicated and fluid situation in Zim, and we're doing everything that we can to actually support our staff and our clients in that environment.
Sure. Richard, I mean, I'm told that we are given another minute and a half, so do you have a final question for Mike?
Yeah, Mike, the final question really, Eskom. I mean, it is too big to fail. I'm hoping that the government and the regulator and the SAE in itself are engaging with, big providers of capital like yourself. What's your view on Eskom in terms of how it's likely to unfold in the next 12 months? So really critical to continue this good news story that we've embarked upon in South Africa.
Yeah, Eskom is without doubt the biggest threat to our economy right now. It is, as you say, it's a monopoly, and it's a monopoly that is too big to fail. I think we're very encouraged, though, in the last few months around the urgency around the required restructuring of Eskom, not just at a board or governance level. That started about a year ago, and that was a very necessary first step. But restructuring Eskom strategically and operationally and financially is much more difficult to do. But my sense in the engagements that we have either with Eskom or with government is that we have grasped the nettle and we're actually going to move forward and do something rather than let the problem continue to escalate on us and kick the can down the road.